We're clearly correlated to global liquidity. We're clearly correlated to the macro environment. Bitcoin is clearly the best expression and the most sensitive index as to how much money is being printed around the world. And so if the next few years continue to be a lot of stimulus, a lot of dollar liquidity, then I think Bitcoin's going to continue to catch a bid. I really, really do. Now, it doesn't mean it can't have corrections. I don't know. I don't know who asked this question, but were you around when Bitcoin went from 100,000 to 70,000? The vibes on this show were very not good. Bitcoin down 35%. I thought you said Bitcoin was the greatest ever. So, I don't know. Is that a dip? Did that make people's stomach turn? I'd say so, judging by the emotions in the chat. So Bitcoin's still going to have these corrections, 20%, 25%, 30%, inevitably, maybe 70, 80%. But I think that 70 and 80% comes from like $1 million a coin.
Bitcoin is again in the spotlight, with price projections for 2025 ranging from $120,000 to $250,000, with others speculating on $1 million per coin in the following years. Bitcoin is currently trading around $106,000, despite recent global uncertainties and increased institutional interest. Analysts believe that Bitcoin's current trajectory is driven by a convergence of factors, including limited supply, increasing demand, and macroeconomic trends, such as increased money creation and global liquidity. According to Jack Mallers, a renowned Bitcoin advocate, Bitcoin has become the most sensitive measure of global money supply and liquidity. He argues that as central banks keep the stimulus faucets open, Bitcoin will continue to catch a bid, reflecting the global need for hard assets in an era of persistent currency depreciation. Mallers acknowledges Bitcoin's volatility, citing previous stomach-churning falls of 20% to 70%, but he sees these as minor setbacks on the path to possibly seven-figure prices. He asserts that, while dips are unavoidable, the long-term trend is clear. Bitcoin's link with the macro environment makes it the ultimate barometer of global financial health. So, as the world's financial system faces new challenges and traditional safe havens such as gold and bonds are reassessed, all eyes are on Bitcoin, not just for its price movement, but also for what it implies about the future of money. Stick around as we bring you more clips from Jack Mallers' latest video. Please don't forget to like, subscribe, and enable notifications for additional in-depth content. Thanks for joining us again. Enjoy the video.
Gold passes euro as second reserve asset as central banks buy. This was reported by the ECB, the European Central Bank, came out, said, gold has passed us, the euro, as the second asset holding cash balances. Take a look at this chart, you guys. So here's what we're seeing on the left. The blue is the dollar. This little yellow here is the euro. The orange is, basket of other currencies, so everybody else. And then the green is gold. Look at gold on a tear. So you saw gold here after the 2008 financial crisis. And then you see gold now coming again at 20%. So gold is larger as a higher share of gold in global foreign reserves, larger than other currencies, larger than the euro. Also noteworthy, the dollar now officially under 50%. Officially under 50%. Big deal. Look at when it has breached this. Only briefly after the global financial crisis, but it's traditionally been over half of foreign reserves. It is now under 50% and falling. Gold is 20% and growing. Central bank gold purchases in the price of gold. Look at 2022, 2023, 2024. That is not just marginal growth. That is substantial growth. They've nearly doubled the amount of gold they're buying. 100% growth. This is not a drill for everyone that is saying, oh yeah, I'll just wait for the world to de-dollarize. I'll wait for neutral reserve assets to be relevant again. I'm like, are you paying attention? What do you think is happening right now? We're literally living through it. Pull up a chart, pull up a Bloomberg article, pull up what anyone is talking about in Washington, D.C. Here's another. This is from the European Central Bank website. Let me read. Moreover, concerns related to sanctions and the possible erosion of the role of major currencies were cited by some central banks in emerging and developing economies. Excuse me, what? What? The European Central Bank said that? 1 out of 4 such central banks referred to, quote, concerns about sanctions, end quote, or the, quote, anticipation of changes in the international monetary system, end quote, as determinants of their investment exposure to gold. What? Have we not been calling this? The recent accumulation of gold reserves by official institutions tends to be concentrated in very few countries. Turkey, India, and China, for instance, top the list of the largest purchasers, jointly accumulating more than 600 tons of gold since the end of 2021. Now, I blew up this asset so you guys can see this. Okay, I'm going to have to turn my head here to read this. Long-term store of value / inflation hedge. I'm going left to right. Performance during times of crisis. Effective portfolio diversifier. Historical position. No default risk. Serves as a geopolitical diversifier. Highly liquid asset. Concerns about systemic financial risk. Serves as valuable collateral. Lack of political risk. Domestic gold production. It's a policy tool. Concerns about sanctions. There we go. Anticipation of changes in the international monetary system. This is the last one on the far right, part of a de-dollarization policy. Are we heading toward a world of neutral reserve assets or what? Or what? You blink and all of a sudden it's happening. I've been saying on this show week after week after week after week, all you got to do is read the articles, read between the lines, pick up what everyone's putting down, follow the hard money. Okay, now all of these applicable to Bitcoin. Let me read these again. Don't think about gold, think about Bitcoin. Long-term store of value / inflation hedge. Check. Performance during times of crisis. Check. Effective portfolio diversifier. I'd say so. Check. Historical position. Again, this is why I think we'll be in a gold / Bitcoin world and then eventually a Bitcoin world because Bitcoin's new. So no check. No default risk. Check. Serves as a geopolitical diversifier. Check. Highly liquid asset. Check. Concerns about systemic financial risk. Check. Serves as valuable collateral. The most pristine form of collateral, I might add. Check. Shout out Strike Lending. Lack of political risk. Check. Domestic gold production. So just replace that with Bitcoin production. China is now mining. Russia is now mining. The US is now mining. Check. Policy tool. Check. Concerns about sanctions. Check. Cannot sanction Bitcoin. Anticipation of changes in the international monetary system. Check. Part of de-dollarization policy. Check. For those that don't know, the way bond math works is when people sell bonds, the yields rise. Basically, they're saying, I don't want these bonds. You need to pay me more to own this thing, right? So you're paying me 4%. I need 5%. So when someone says, screw this 4% bond, and they sell it, it raises the yields. So when you see yields rise, that means people are selling bonds. There's a less interest in bonds. Bonds were traditionally the risk off, the safe haven. If there's a war, if there's a crisis, everyone can run into the risk-free return. And what Muhammad is saying is this is what he calls unusual behavior. To Bitcoiners, this is expected behavior. We've been calling this on the Jack Mallers show. But point is, we'll take historically unusual. That's fine, whatever. Historically unusual, meaning, people look at this asset class as a flight to safety. And if you contrast it versus gold's flows and Bitcoin at and around all-time highs, think about it. Bitcoin all-time highs, gold all-time highs, bond yields up. That is the USTs. These things are not the safe haven asset anymore. We are very, very quickly progressing towards a world of neutral reserve assets. Bitcoin is going to be the inevitable winner over the coming decades of the world we are rapidly ascending towards. This fascinating. So this is the SPR. This is our petroleum reserve. So this is basically like the US's strategic, so SPR, strategic petroleum reserve, like a strategic reserve of oil for us. So if you can see on the far right here, Biden ran this puppy down, trying to get elected, trying to get Kamala Kamala elected. And so the point is our SPR is at historic lows. So this is going, if you guys see, this says 1990. So we're going all the way into 1980, 1970s. We're at historic lows for our strategic petroleum reserve. Not good. So the point is, if this continues on in Iran and Israel, we're not going to have a way to defend the price of oil. Interesting, fascinating. With the fragility of the treasuries market, with yields going up, with gold going up.
A bold prediction is gaining traction. Bitcoin is set to replace traditional haven assets and transform the global financial landscape. The spotlight is on central banks rapidly boosting their gold reserves, with gold now surpassing the euro as the second largest reserve asset, while the dollar's share of world reserves slips below 50%. A clear parallel is drawn between gold and Bitcoin, highlighting both as long-term stores of value, inflation hedges, and crisis-era safe havens. Bitcoin is seen as even more compelling due to its decentralized nature, resistance to censorship, and capacity for continuous innovation. As bond yields rise and traditional assets lose their haven appeal, some argue the world is quickly moving toward neutral reserve assets, with Bitcoin emerging as the inevitable front-runner. Let's watch more clips from Jack Mallers.
I think that the dollar will continue to get debased against assets. And, the harder the asset, the scarcer the asset, the more globally accessible the asset. So now we're talking about capital controls where not everyone can go shopping in the United States anymore. So if you have an asset that is accessible to China, accessible to Russia, accessible to Brazil, these assets, these global neutral reserve assets will continue to outperform everything else. Bitcoin will be the winner. Do you think this unwind of Bitcoin and gold becoming the safe haven assets instead of the American bond market was inevitable? Would this have happened no matter who is the president? Yes. I do think Trump, views himself on a mission from God. He's talked about this publicly, in his campaign. He almost got shot in the head, and he views himself, on a mission from God to fix America. I'm not commenting on that. Whatever. It's what he believes. I do think that belief is fast forwarding a lot of this stuff. We went from, hey, let's focus on cutting the government with Doge, and let's take the richest, most, glorified entrepreneur in Elon Musk and have him fix our problems. And in a month, we realized that's not going to work. And then we tried tariffs, and in a week, we realized that's not going to work. So we're very quickly cycling through, this story is going a lot faster. So I will admit that. The story is going probably a bit faster than if Kamala won. But nonetheless, yes, monies want to be won. And monies compete most particularly over their hardness. What's the hardest money that everyone has access to? Hardest in reference into how hard is it to make more of it? And Bitcoin is inevitable from that standpoint, as long as it has the monetary properties we need, as long as it's divisible, as long as it's portable, as long as it's easy to store, as long as it's easy to verify, then it's a question of hardness. And so Bitcoin was designed by us humans. Think about it. Bitcoin is the only market money that we made with our hands to be perfect, and we engineered with technology to make better forever. Bitcoin's a software project. It's going to be getting better forever. We found gold in the ground. We didn't make it. We didn't make it to be perfect. That's the part that people don't understand is we literally purpose-built Bitcoin and continue to work on it to be perfect at the job money is supposed to perform in the market. And so, yes, from that standpoint, it's absolutely inevitable. Bitcoin is not optional. What people don't understand is, by you not adopting Bitcoin, you are getting poorer in Bitcoin terms. The meme, have fun staying poor is real. And so it's not optional. It's not like, I'm just not a Bitcoin guy. Well, then you're not I want to live in a big house guy. You're not a I like vacations guy. You're not a I'm going to eat high quality food guy. You're not a high quality of life guy. You're on a sinking ship. So owning the hardest money isn't optional, because as the rest of the market around you owns the money, you're increasingly falling into abyss. So it's not optional. It's really not. It's just how long does the transition take? But it's absolutely inevitable, in my opinion. Do you think there are going to be no pullbacks then in Bitcoin similar to gold? To say that gold didn't have any pullbacks is probably incorrect. Gold just operates over much longer, market cycles. I think Bitcoin market cycles are likely different than the past. Hold on, though. Don't you dare clip this and put it on Twitter that I said this time is different. I do believe we will have bull and bear markets. I absolutely do, because I think that's just human psychology. That's reaching euphoria, and then that's, you have sellers that overwhelm the market, and then people get despair, panic. So I think human beings are predominantly what causes, our emotions are what cause these bull and bear cycles, in my opinion. So I do think we will experience dips and ones that make your stomach turn. Absolutely. But I do think we're in a structurally different era where these 4-year cycles are clearly, this one's clearly different. We're clearly correlated to global liquidity. We're clearly correlated to the macro environment. Bitcoin is clearly the best expression and the most sensitive index as to how much money is being printed around the world. And so if the next few years continue to be a lot of stimulus, a lot of dollar liquidity, then I think Bitcoin's going to continue to catch a bid. I really, really do. Now, it doesn't mean it can't have corrections. I don't know. I don't know who asked this question, but were you around when Bitcoin went from 100,000 to 70,000? The vibes on this show were very not good. Bitcoin down 35%. I thought you said Bitcoin was the greatest ever. So, I don't know. Is that a dip? Did that make people's stomach turn? I'd say so, judging by the emotions in the chat. So Bitcoin's still going to have these corrections, 20%, 25%, 30%, inevitably, maybe 70, 80%. But I think that 70 and 80% comes from like $1 million a coin. So I can imagine Bitcoin ticking $1 million a coin and falling all the way down to 300,000 at some point, years ahead. Who knows? I don't know, but I definitely don't want to assume that market cycles are over. It sounds dangerous. Do you think gold will outperform Bitcoin through the end of 2025? No. I think gold has been leading. Central banks have not yet started buying Bitcoin. That's the big differentiator right now. Bitcoin's still too small of an asset, and I don't think any central bank wants to be first into buying Bitcoin. That's what's, really driving gold. Central banks are buying, we just went over it on the show, a tremendous amount of gold. China's buying a tremendous amount of gold. China's mining Bitcoin. Russia's mining Bitcoin. These countries own Bitcoin. These sovereign wealth funds own Bitcoin. Don't make a mistake about it. But their allocations have to be smaller because the asset's smaller. You make too big of a move, you're going to run the price. And so, front run yourself. So what we've seen is gold leads Bitcoin directionally, and then Bitcoin catches up and some. And so I continue to think that will be the case. And I think Bitcoin will vastly outperform gold in the grand scheme of things. Is gold going to outperform Bitcoin on this day or this week or this month or the rest of this year? I don't know. My default answer is no, because on net, Bitcoin outperforms. But, in small windows, it's totally possible. But, Bitcoin is the better money. It's been the better performer its whole life. And I think it'll continue. There's no reason that's going to change. How do you see Bitcoin's value stated in the future without being tied to any fiat? What would that look like? Well, like any money, it's tied to goods and services. So, Bitcoin, if Bitcoin is not tied to fiat and isn't priced in fiat, and this is hyper Bitcoinization, this is in a way, way, way future state. You walk around and your sandwich is, 2,200 sats, and your Coca-Cola is, 400 sats, and you go on and you live your life. But the point of a money is it's the one market good that you don't consume. So a sandwich and a Coke, or a car or an airplane, I consume the airplane to fly me. I consume the car to transport me and drive me around. I consume the sandwich and the Coke as calories to give me energy to live. Okay. I acquire the Bitcoin not to consume.
According to Jack Mallers, the dollar will continue to lose value in comparison to assets that are difficult to create, scarce, and easily available around the world. As capital restrictions tighten and not everyone can freely move money or shop overseas, he believes assets like Bitcoin, which can be accessed by anyone in countries such as China, Russia, and Brazil, will gain value. There's a transition occurring in which Bitcoin and gold are emerging as the new haven assets, replacing the function that the American bond market formerly played. This transformation, he claims, would have occurred regardless of who was president, but some political actors may be hastening the process. Jack Mallers explains that money competes based on its hardness, or how difficult it is to produce more of it. He emphasizes that Bitcoin is unique in that it was purposefully built by humans to be the ideal form of money, with features such as divisibility, mobility, simplicity of storage, and verification. Unlike gold, which was discovered in the ground. Bitcoin is a software project that evolves. He argues that as more people and institutions accept Bitcoin, those who do not will fall behind in terms of purchasing power and standard of living. In his opinion, holding the most difficult money is not optional. It is required if you want to maintain or increase your way of living. Mallers predicts Bitcoin will go through bull and bear cycles, driven by human emotions like exhilaration and panic. He observes that, while current cycles may differ from those of the past, significant volatility, including strong pullbacks, will still occur. Gold presently leads because central banks are purchasing big quantities, but Bitcoin is still too small for major central bank purchases. However, as Bitcoin increases, this dynamic may shift. Looking ahead, Mallers sees a future in which Bitcoin is no longer tethered to fiat currencies, and its worth is directly reflected in products and services, such as pricing a sandwich or a drink in satoshis rather than dollars. As we wrap up, the big question is, do you think Bitcoin will eventually become the world's top reserve asset, or will gold keep its edge? Let us know your thoughts in the comments below. Please share this video and hit the like button. Thanks for watching, and don't forget to subscribe.